Barclays Plc is next. Now, we're not talking about Barclays Africa, the local ABSA holding company here. We're talking about Barclays Plc in London. And of course, it's one of those universal global financial services holding companies. It's got the full range of things going on. They invented the Barclay card and the Bob machine, which stands for Barclay card operating, what Bob? Bob was the thing in 1967.
Yes.
It's the first cash machine. Stick the card in. Incredible. What a technological advancement. In recent years, though, it's made quite a few missteps. They had the same debacle in 08, and they haven't recovered quite as well. So we'll see in a minute what kind of mistakes perhaps they've made. It's under the helm of a new lieutenant in the form of CEO Jess Staley. Market cap £39.9 billion, which if you do the maths at 120 is about $48 billion. So remember where we were at the first half of the show. We're coming down the league tables here. Not currently profitable, but that's really just because of write-downs and historic adjustments.
And
what do you think of Barclays?
Yeah, so this one, much more difficult investment case, obviously UK-centric, so they've got the whole Brexit issue to go through. They've been trying to reduce their footprint significantly, I guess, focus on their core banking, something that they were good at in the past. So the far-flung operations and a Bob Diamond where there was global expansion.
The African business.
Absolutely. So and they really need to bolster their balance sheet. They've also been dogged by a number of scandals, LIBOR fixing scandal, interest rates, currency rates, fixing rates, and then also mortgage-backed securities, which, interestingly enough, they decided not to settle the recent case where some of the other banks did and take their chances, possibly with a new Trump administration getting a better result.
Share chart, let's look at it. Its all-time high was about £7.80. Currently sits at 235. Has had a bounce, but still. Okay, listen, we're running low on time, but I just wanted to point out that this company has had a series of regrettable missteps over time. I mean, apart from the ones you've already mentioned, they sold iShares to BlackRock, you know, for $15 billion, and that business is now worth a hell of a lot more than that. They've seemingly had difficult timing, you know, always.
Yeah, I mean the recent share sale of Barclays Africa at a, at a much more elevated rand-pound level. It's a lot more valuable asset today. Yeah.
And I worry a little bit that the board, having tried to kind of go back with Anthony Jenkins to a sort of calmer, kinder sort of banking model, has now decided that it must re-accelerate its investment banking activities under Staley, who's an ex-JP Morgan guy, who's now, throwing pieces overboard. I don't know. It just feels to me like I'm not hot on this one.
Yeah, it's a sort of a fire sale. I think they've got a bit desperate. Their balance sheet is weak. They really do need to make some changes. So very much a work in progress. We'll see a lot of share price volatility also.
Could do well, but there may be risks at stake.
Absolutely.
Okay.